We are just days away from getting confirmation on one of the biggest crypto bull runs we've ever seen. The data that came out yesterday shows me that we're about to get all the pieces in place to send crypto to new all-time highs. So if you want to find out what that data is, why it makes me so convicted, and what you need to know as an investor, make sure you watch this video through to the end, like and subscribe down below, and let's hop into today's video. So as you might know, the Federal Reserve is getting ready to cut interest rates next week at the FOMC. Rate cuts are stimulative for the economy and are good for risk assets like altcoins and Bitcoin. What they're dependent on is the data coming in to tell them that they need to cut. The Fed needs a reason to cut. They can't just do it because they feel like it. The data that we saw today confirmed to me and to many others that there is sufficient reason to cut rates. What they're looking for is weakness in the labor market. And we've been seeing weakness in the labor market last week with the jobs reports, the non-farm payroll reports, all coming in saying that the economy needs a little bit of help. They need some stimulus from the central bank. The data that we saw yesterday tells us that it's even worse than we thought. Have a look at your screen. We just had the jobs data from March 2024 to March 2025 reduced by 1 million jobs. That's almost 1 million jobs less than we actually thought were added. This is signaling that the economy is in desperate need of rate cuts, in desperate need of stimulus, because the job market is grinding to a halt. When you have labor market weakness like this, what you want to do is you want to cut aggressively into this. Otherwise, you're going to let the labor market get carried away. Labor market weakness is non-linear, which means it could step down, and then fall off a cliff. It's not an incremental decline. The Fed needs to get ahead of this. And this data here showing us that what we thought was a somewhat, maybe kind of lukewarm labor market ending in March 2025 was actually a lot worse than we think. And next month revisions probably aren't going to be any better. Now, this is exactly what crypto has been waiting for. We're in a period where bad news is good news. And when we see labor market revisions and we see labor market weakness telling us that the economy needs help, that's bullish for us, because in comes the Fed to cut interest rates and pour liquidity into the crypto market. I think that there is an explosive alt season coming for us in the next 3 to 6 months. I think that this could very well go into 2026, because have a look at your screen. We're looking at the logarithmic regression band. I know it's a fancy word. It's essentially just a curved line telling us how things grow. It can account for variable growth. And so this red line here, this is the trend rate of growth. This is the fair value of growth that we're seeing since the inception of crypto. And you can see that every cycle, every 4 years, we bounce above that trend line. This trend line right here is kind of our guide to alt season. But we should bounce above it. Every cycle we bounce above it. Now, there are diminishing returns. Something that's growing at such a fast pace eventually has to slow down, like a sponge absorbing water. Sooner or later, it's not going to absorb as much water as it did when it was dry. And so that's where we're at. That being said, look at this last bump up above the trend line here. If we even get a little tiny bump up above this trend line, we're looking at a $10 trillion total crypto market cap. The fair value at the end of 2025 takes us to almost 5 trillion. We're sitting just below 4 trillion right now. So how do we get there? How do we get from 4 trillion total market cap to 10 trillion market cap? Let me tell you. How we get there is by the central banks all around the world injecting liquidity into markets. They do this by printing money, and they do this by lowering interest rates. And what do we have coming up next week? A Fed interest rate cut. Because the labor market data that we've been talking about for the last couple videos has been showing us, flashing green lights, that it's time to lower rates. It's time to inject liquidity into markets. And this is part of the global liquidity cycle. Have a look here on your screen. Global liquidity comes in waves due to the 4.5 year cadence of global debt refinancing. Every 4 or 5 years, debt all around the world has to be refinanced. To do it, they need to print money, inject money, more money into markets, and up we go, up the global liquidity cycle. And so this is kind of a framework. Now, whether or not we go all the way up here, whether or not we come down and chop around, that has yet to be seen. But one thing that we know for sure is that central banks are engaging in a rate cutting cycle. And so check out this chart. This chart is telling us what percentage of central banks are in a net easing mode, are in a net rate cutting mode. And you can see that here, central banks in brown, 67% of central banks around the world are cutting rates, injecting liquidity, printing money. Bullish. bullish for crypto, bullish for altcoins. And I believe we have 3 rate cuts coming from the Fed before the end of the year. Massive liquidity. I got JP Morgan's Chief Investment Officer, Kay Her. She's going to break down why she thinks we have rate cuts ahead and why she's bullish for the future. Check out what she has to say.
So we're more in the soft landing camp and they expect the Fed to cut once in September, so 25 basis points. And if we continue to get this type of economic or this type of employment number, we would expect probably 2 more cuts, so call it 75 basis points. I think employment is the number to focus on. At Jackson Hole last month, Fed Chairman Powell made very clear he's more focused on the employment side of the dual mandate than he is on the inflation side. But I would agree with Ian, we absolutely will be watching CPI next week as well.
3 cuts before the end of the year due to weak labor market data, which we have. On your screen, we've got the chances for a rate cut. We got 91% chance, 92 almost, of 25 basis points, 8.3% chance of 50 basis points, so 100% chance of a rate cut coming up next week. Don't think this is going to change. It's only going to get better. And this is what we have in store for us as investors. We have a massive channel that Bitcoin is getting ready to bounce off the lower end of and up into the rest of this bull market. And I think that it needs the right catalyst. The right catalyst, Fed rate cuts, new rate cutting cycle, less interest rates, more liquidity, higher Bitcoin prices, higher altcoin market, because eventually that liquidity funnels down from Bitcoin to Ethereum to Solana, XRP, and then down and down into the small caps, into $15, $20 million market cap projects. Some of them will do incredibly well. Most of them probably won't. Hopefully you've picked the right ones. So we got the others chart here. Have a look. We got September 2024. This is right before the Fed did a 50 basis point cut and continued to cut for the next 2 meetings. Look at what happened with the altcoin market. We went from a $210 billion altcoin market cap up to a $365 billion altcoin market cap. And that was while Bitcoin was raging. That was before Bitcoin dominance falls and the money that's going into Bitcoin comes down into the alts. This is how it starts. This is how it happens. It starts with the Fed cutting rates. It starts with the injection of liquidity. The bigger caps go up, and then money trickles down as we get more and more into the cycle, which I think could go into 2026. If you want to find out why I think it's going to go into 26, make sure you tune in next week for the video that I'm going to do explaining why I think the 4-year cycle is a little bit different this time. And if you want to stay up to date on important macro developments like this to gain conviction and insight as a crypto investor, make sure you like and subscribe down below. Leave a comment, let me know if you've learned anything. Thank you for being here, and we'll see you in the next video.